Are you getting the returns you should be getting in your pension? Let's get several things straight. First of all, the past is no guarantee as to the future. It's not a guarantee the world could end tomorrow, but it could be a guide if something consistently has delivered. The problem with consistency is with the stock market, it can be quite variable. So let's have a look at some of this and let's compare it to pretty high benchmarks that you'd want to set yourself. So let's compare it to two major benchmarks. Let's look at the S&P 500, which is 500 of the largest US companies. Actually, it's 7 because it's capital size weighted. In other words, larger the company, greater the weighting in the S&P 500, and 7 companies pretty much dominate the movements. But nevertheless, S&P 500 return, and you can see year by year how that's done, going back to 2017. And then let's also look at the FTSE UK all shares. That's all listed companies in the UK, pretty much. All listed UK companies on the main market in the UK, and how that's done. You can see the numbers over here. You might need to turn the phone sideways to see it a little bit better. And then we've created some of our model portfolios. And the idea with these is buy and hold, even through the worst periods like 2022. That's one approach. Another approach is you could exit. But that's timing and something we call daddy bears, and you can leave that to one side for a second. We'll do separate videos on that. And you can see, yeah, you can create quite a few portfolios. Normally, a portfolio has between 20 to 40 stocks, just so you know. They've got usually a long history behind them. The companies have an even longer history, so they tend not to be new releases, tend not to be IPOs. They tend to be companies which are at least $1 billion in capitalization. They tend to have high sortinos. These are high average returns year after year with low volatility to the downside. And if the volatility results in falls, then those falls get recouped relatively quickly. So they have certain characteristics amongst them. In the case of companies, unlike exchange-traded funds, they will also tend to have good year-on-year growth in profits and sales. The kind of things you'd expect in a good company. If I gave you a choice, do you want a company which is not growing or one which is growing? All other things being equal, you'd probably say, well, I'd like one which is growing, please. And when we put that together, you can see a few things happen. Now, first of all, you know it's not something which can be just purely cherry-picked. If you're cherry-picking, you wouldn't have just got as little as 1% in 2022, albeit the S&P dropped 18% then, okay? And the FTSE was flat that year, so not too bad, though it was down in 2020, and the FTSE was down in 2018. It's not that our model portfolio is like the Quality 5 Plus, which has 44 stocks in it,